Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. Okay, so looking back at the recent bearish action, we can see it all started from the failed follow-through higher to both the weekly key reversal up in mid-April and the daily key reversal up on the 19th of April, which also turned out to be an indecisive doji cross, right at the top of the recent market. Things then became interesting as we could look at the whole action from the heights of March all the way until last week as a large bearish halfway hesitation, with a potential target X in the 2030 area. This was one of the most gratifying moments in recent times for me, as prices dropped down last Thursday to reach target X and immediately shot back up since then with an immediate countering bullish harami at the recent low last Thursday. The subsequent rise, including this week, pushed up through. Now, these are in no particular order. The congestion is at 21.32 to 35. The extension of the lower trend line for the May to June 2021 descending triangle, currently 21.45. And interestingly, the middle time, currently 20.89 of the March to April bearish Andrews pitchfork. In addition to this large bearish halfway hesitation, the action from that same peak on the 19th of April also created a small bearish halfway hesitation with a potential target X1 in the 2087 area. Unsurprisingly, this was reached 2 Thursdays ago. So where does that leave us now? Well, prices have risen up to the congestion at 21.86, synonymous with the lows of February and December last year. This is where we halted with the short moving average currently at 21.68 entwining it. There is an opportunity to move higher, but there also does not seem to be any impetus to do so anytime soon. At the same time, the violent move back up last week indicates that the way lower may not be ideal either. I'll add now one key pattern that is still a lagging indicator. The key pattern that is still valid and operational is the March to April bearish shift pitchfork. The market is right now in between the upper time above, currently at 23.05, and the middle time below, currently 20.89. The lagging indicator is that the market made a dead cross with the short medium moving average, currently 22.99, dropping down through the slowly declining medium moving average, currently 23.07. Whilst we are waiting for the market to decide whether to go up, down or sideways, I'd like to nurture an idea I planted in your mind last week. It is to regard the whole action of 2022 so far, even perhaps going back to November last year, as a possible diamond pattern. This idea is still way too early, but you may hear more on this should it develop in the future. LME 3-month tin. The move down below the long moving average, currently 39.080 on Monday 2 weeks ago, with a bearish opening long black Mariposa, was the market finally making up its mind on what to do and choosing the bearish incentive after faffing around for 2 weeks of relative indecision. The drop that day only halted at the 50% Fibonacci line of the March 2021 to March 2022 move at 36.945. However, it continued the next day, though Wednesday saw a temporary respite with a combined immediate countering bullish harami and bullish closing white Mariposa. However, the next day after that, the Thursday saw an even bigger move lower with a bearish opening long black Mariposa that dropped down into two congestion zones. The first and smaller one between 33.665 and 33.475, and that contained the old April 2011 previous all-time high. The second, larger, congestion zone between 31.845 and 32.985 contained the 50% Fibonacci line of the March 2020 to March 22 move at 31.845. The first zone slowed the drop, whilst the second zone finally stopped the fall, at least for now. What was interesting was how the first zone managed to hold up the market on a closing basis, even if it was the smaller of the two zones. Anyway, the drop fulfilled the downside target, unlabeled as it was so close to the mid-April to date bearish halfway hesitation. So what else has there been going on? Well, I did mention 2 weeks ago one other pattern that was in the construction. It was an inverted cup with handle pattern for the March to start of May action. And previously I pointed out that I still found it a bit early for this pattern's full development, and I'll delve further into this pattern. Well, I was going to delve further into it last week. Well, last week came, and part of me wishes I'd laid out the parameters for an inverted cup handle pattern earlier. You see, the market's drop since 2 weeks ago had already fulfilled any potential targets on the downside. Indeed, had made enough of a move 2 weeks ago to qualify for the pattern having a follow-on lower. What this also meant, as I said last week, is that all patterns on the downside for the moment have been fulfilled. So where does that leave us now? Well, it very much depends on the state of the two congestion zones below. The smaller 33,665 to 33,475 zone, and the larger between 31,845 and 32,985. Last week I said, and I quote, "If these hold up, then a gradual move over to test the March to date downtrend, well, that's currently at 38,460, sometime in June may be possible. However, I would like to again emphasize the one admittedly lagging indicator that should be borne in mind when considering this. It is the dead cross of the short medium moving average, currently 47.85, down through the falling medium moving average, currently 41.720. While this may not be the cause of a fresh fall in the market due, as I've indicated, to the likely quality of the support that is underneath the current levels, it nevertheless seems likely to stymie any potential pullback. Thus, we may well go sideways, as we roughly have done for the last 2 weeks and a bit, and for a bit longer, or at least until we approach the previously mentioned downtrend." End of quote. We shall see how this develops, or until a better pattern emerges. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investors International Limited. And here comes the final bit.